Hi traders, in today's video I am going to show you a very simple strategy that you can use in your everyday trading. You can add it to your strategies, you can use any parts of this strategy, and with this video I want to show you that you don't have to have the most complex strategy in the world to increase your chances to win in the markets. And this is a strategy that I just tested for a 20-year period, which is huge. I tested it from 2004 on the USD GPY daily time frame, and it showed very consistent, stable, positive results without, and it is the most important part, without any optimization. So the strategy is no way that it is curve fitted. It is a very simple strategy actually. Let's just jump into it. First of all, you are going to need two weighted moving averages, and I put it to the chart. You just need to write WMA to TradingView. You can find it in MT4 and MT5 as linear weighted moving average. We are going to need two of them, and the first one is going to be 50 period, and I want it to be seen better, so it's going to be blue. And the second one is going to be 200 period, and this one is going to be the red one. And I want to have a thicker line. Okay, we have these two moving averages, and as I said, I did a 20-year TIG data backtest with realistic swaps, with real swaps, spread and latency calculated, and with all these it showed consistent profits. The strategy is the following. You have one WMA that is 50 period and one that is 200 period, and when the 50 period WMA, that is the blue, crosses above the 200 period WMA, that is the red one, so here for example, here's a perfect cross, then you open a buy trade. And so it is easier for you. I want to write it down. Let's like buy entry. Very simple. When the 50 period WMA cross above the 200 period WMA, we are taking a buy trade. It is as simple as any strategy can get. Where do we close the trade? We have a couple conditions. First of all, the first condition is that we have a safety stop loss. It is very important to use a safety stop loss at all times, because without this, the strategy is not working properly. And I can say this because I tested this strategy for 20 years without optimization. And the safety stop loss I used was exactly 100 pips. And we have a take profit as well, which was 400 pips. These are our non-dynamic exit parameters. And then we have a dynamic exit parameter which is a trick that not all traders are thinking about when they are using this kind of moving average strategy. It is not when the cross happens here again, but when either if the price is crossing below the 200 WMA and it is a very simple rule. It happened just here, and yes, it is kind of a lagging method, but you have a safety stop loss and a take profit as well. And I am going to show you the exact places where you can close the trade the most efficiently. One is here, which is like I'm showing you how many pips it is. I think it is quite a good amount of pips. If we entered here and we exited somewhere here, it is around 700 pips. Of course, it would have been better to close it here, but life is not about 100% setups, and this setup is actually working on long-term data. So I wanted to show you the first exit, and we have a second exit rule as well as for the dynamic exits go, and it is when the price is crossing below the 50 WMA for the third time. These are rules, and of course this trade was closed by actually the take profit, because we entered the trade here and the take profit was at 400 pips. So take profit was just around like here, for example. So we closed our trade. Of course, it is so like here to somewhere here. Of course, this is not at the right place. This is the right place, sorry. And as you can see, the take profit did a great job, because we could have waited for the dynamic exit for like May to December, so many months, but we closed the trade at 400 pips instead of like just a couple hundred pips higher, but not 10 times higher, just like 200 pips higher, but we closed it in just about a month. And this is why I'm using multiple exits with these kind of simple strategies, because if you just run a simple strategy like this without multiple exits, you are going to see that it is not working. It is not enough to work on a 20-year period. But this way it is working, and I want to show you the sell trades as well, how you should approach it. And from now on, we don't need this. It is very simple. When the 50 period VMA is crossing below the 200 period VMA, then you are taking a sell trade and you close it either in 400 pips. It ran from December to like January So it is not even a couple months, it is just about 1 month, as well as the previous trade. And of course, you can optimize your strategy much better. You have a closing opportunity at a pretty bad place, because one of our closing opportunities are here with the dynamic exit when the price is crossing above the 200 WMA. It is not good at all. But luckily, we have the take profit and stop loss opportunities as well, and we close the trade much earlier that way. So we would have, like, this one is a break-even, but instead we closed the trade somewhere about here in this range. And of course, it is much better than the dynamic exit in this case. But if you take a look at all the trades from my testing for the 20-year period, there are multiple instances where the dynamic exit is much better to close your trades at, when the stop loss is working great because the price is, it went to another direction. There are many instances and variations, and this is why you need at least 3 layers of exit opportunities. And you can also test it on other pairs as well. And if you are interested in this strategy, if I should further test it on other currency pairs, let me know. You can customize your parameters, of course. Like, you can use 300 take profit or 600 take profit. You can use different kind of like crosses. For example, you can use the 20 and 200 cross to exit your trades. You can add more exit opportunities. I am doing these videos to open your eyes how simple strategies can be actually used very successfully in the markets, instead of using like martingale, EAs, and all those bullshit stuff that doesn't actually have a strategy at all. And now I am showing you the backtest here on the daily time frame with everything data, with the latest latency, with $10,000, 1 to 100 leverage, and up to date. It is actually more than 20 years of data. It is going to take a while, so let's just jump into it. I am going to make it faster for you, because this testing is usually it's taking a while, but I definitely want to show you this testing because it is very important to see the trades, how they are working out. For example, here this trade was closed at a great place, at the maximum basically, and of course many trades are closed below the maximum level, but this trade was great as well. There's a little bit drawdown, then closed at nearly the maximum, and this only means that the dynamic exits are and the take profit and stop loss levels are working good. We have a couple of stop losses here. That is very good, because if you don't have a stop loss with any strategy, don't even trade. These kind of things can happen absolutely in a 20-year period. The key is to have a better risk to reward ratio. Win rate doesn't really matter long term. Risk to reward ratio, what really matters in trading. And now I am going to just let it run. You can have a simple strategy and you can win overall. And it has periods like the COVID, like the war between like Ukraine and Russia, everything in the 20 years, even the 2008 crisis, but it still managed to have a great and successful period and stable. And don't look at charts like you want to see the perfect one, because I could show you a perfect chart here, like a chart that doesn't have any single stop loss. It doesn't have a lost trade. That is like this, like when you are buying those bullshit scalping robots, like a perfect chart. This is only winning, like 100% win rate or 99% win rate. It is fake. It is completely fake. When you see those, this is a real chart. And many traders would be so happy if they would have made this much money and percentage over the years, because the reality is most traders are losing their entire savings. And this is why I'm doing these videos, to show that you can have even a simple strategy with a proper and well established money management dynamic exit system, and you can win over time. Of course, in the markets there are no promises, like you can lose with any strategy, but you are going to lose with martingale scalpers and all those strategies like grid, averaging, and like 100% over time. Like not maybe you go with them like for a few months or even a year, but over time, like 20-year period, you most definitely lose with those ones. And it is just a fact. It is just a fact. And don't let like those casino type brokers and YouTube influencers, Forex influencers fool you that it is possible to consistently and long-term make money with those algorithms. Just know what you are getting into and properly test your strategies. I hope this whole video was interesting for you and insightful. If so, leave a like, subscribe, check out my website, because I have many articles about these type of testings and many statistic-based articles, and also safe robots that you can ask me any questions about in email or Telegram or even WhatsApp. Just let me know. Ciao.